Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, January 10th. Happy Friday to you all. Hope you guys have great plans for the upcoming weekend. Hopefully, you guys are staying nice and warm, especially those on the East Coast. We got just a couple economic news, but we do got some biggies today. We're starting with the jobs. So the non-farm payrolls that the Bureau of Labor Statistics released today for the month of December, we had last month, or actually back in November, 241,000 jobs created, which is a great number. Forecast was supposed to be a little bit more conservative at 193 for the month of December, and we actually had the lowest in 3 years, basically at 74,000. So this was a huge disappointment, far off from what the forecasts were. So now we're going to jump over to the unemployment rate for the month of December, and we had a 7% back in November, and the forecast was supposed to remain the same at 7%, and it dropped down to 6.7%. So of course, people are scratching their heads like, how could this be? We had one of the worst reportings in 3 years for the month, but yet it goes up down 7%, goes down 0.3%. So obviously, people fell off. They did revise the number for month of November up about 38, I believe it was 38,000. So that one did go up a little bit. But overall, the fourth quarter, grew a little bit more than the third quarter. So a little bit better numbers in the fourth quarter versus the third quarter. Some of it's also being kind of blamed for bad weather. But again, it may be a little bit more related. We may not be on the firm footing. So this will be something they'll keep an eye on. This is also something that they don't think is going to alter the plans from the Fed on their tapering. They're still expected to do about 10 billion reduction this month and maybe finish by end of the year on their quantitative easing and the tapering on that. So as interest rates will kind of climb upwards, as there will be less demand from the Fed's purchases. And last but not least, we got the wholesale inventories for the month of November, and we had a 1.3% growth in the month of October, and for the month of November, it went up a half. So still decent numbers. It went upwards a bit. Let's go ahead and jump over to the headline news here. And the only thing we got to report today is stock market's a little mixed today. The Dow Jones was down, but the Nasdaq and S&P were kind of up and down, but very minimal trading, very low production on those side of things. So be prepared on the stock side of things because of the job market. If there's concerns, there'll probably be financials as well as tech sectors might be a little bit more affected in those terms. Let's jump over to the bond market and see what happened over here. Now, yesterday, at the end of the day, we had what they call a bond rollover. So basically what happens is you can almost disregard yesterday's chart, which is that 3% right here. It dropped about 31 basis points. So if you factor where 31 basis points, we would be a much higher position, and we'd be closer to about the 100 level here. So we would actually had a pretty good day yesterday if you factor in that bond pricing in there. But today we're actually at the 100.3.03. So great pricing right there, much improved from where we were obviously yesterday. So we'll have a slight improvement in the interest rates today. So nice numbers there. All right, folks, I hope you guys have a great weekend. Be prepared next week. Some volatility. We got some important news. Monday will be kind of light, but Tuesday on we'll have stuff like retail sales. We'll have the inflationary numbers on the wholesale as well as the consumer level. We'll have manufacturing in the New York and Philadelphia region. We'll have consumer sentiment. All those things will be a major factor in where we go with interest rates next week. All right, or where the markets will dictate. All right, have a wonderful weekend, and we'll see you guys Monday.